Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental stock analysis of Ally Financial Inc., ticker symbol Ally, ALLY. At the time of recording this video, Ally is trading for just over $42 per share. Year to date, the stock is down about 11%. Going back over the past year, Ally is down about 24%. Over the past 5 years, Ally has done very well, returning about 18% compounded annually. And since they were public, Ally's returned about 6% compounded annually. We can see that their stock price was hit very hard by the March of 2020 crash and then went on a significant tear for over a year. Since about June of last year, their stock price has trended down slightly. So we can see that Ally is trading closer to its 52-week low than it is to its 52-week high. Ally is about a $14 billion market cap, give or take. Roughly 13.7 at the time of recording this video. So what does Ally actually do? Ally Financial Inc. is a diversified financial services firm that services automotive dealers and their retail customers. The company operates as a financial holding company and a bank holding company. Its banking subsidiary, Ally Bank, caters to the direct market banking through internet, mobile, and mail. The company reports 4 business segments, including automotive financing operations, insurance operations, mortgage finance operations, and corporate finance operations. The company was formerly known as GMAC Inc. and was the lending arm of General Motors and changed its name to Ally Financial in May of 2010 as part of a restructuring post the Great Recession. Ally Financial Inc. was founded in 1919 and is based in Detroit, Michigan. So we'll be performing a modified 8-pillar analysis of Ally. The 8-pillar analysis is popularized by Everything Money, but it doesn't quite fit for financials and banking stocks. It's modified slightly to better reflect what some of the averages are for the industry and just some factors that we're going to want to look at. Full disclaimer that I'm not an expert on financial stocks and that just by the nature of things, financial stocks are going to be more difficult to analyze through certain aspects. I want to be transparent that this video is about learning in public and improving as investors by taking a look at these types of financial companies together. So as we go through our analysis together, if you have any feedback about things to look at or ways to improve while we're looking at financial and banking companies, please let me know in the comments down below. So with that said, let's get right into our analysis. Starting off with pillar number 1, we want Ally's average 5-year PE to be below 12.5. So currently, Ally is trading for about a 5 times earnings multiple, and over the past 5 years, they've traded at just around 10 times earnings. So pillar number 1 is going to be a check. Pillar number 2, we want Ally's average 5-year return on equity to be above 9%. While their return on equity has fluctuated a bit, Ally does a pretty good job here. They've done very well over the past year, and averaged out, their return on equity is exactly 11.11%. So pillar number 2 is going to be our second check. Pillar number 3, we're looking for 5-year revenue growth. They've grown revenues from $5.9 billion in 2017 to about $8.7 billion in 2021. So far, so good. We have 3 checks in a row. Next up, we're looking for 5-year net income growth. So in 2017, they had about $930 million of net income, and they tripled this to about $3 billion in 2021. So that's another check on pillar number 4. Because banking stocks are using their deposit base, we're actually going to value the company based on its net income. Averaged out throughout this time period, they earn about $1.6 billion a year. So we'll use that number in place of their free cash flow for pillar 7 and 8 coming up later on. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a stock, what you're really buying is an ownership percentage in a business. So you don't want a business that dilutes shareholders and ultimately lowers that ownership percentage without your say. We can see that over this time period, Ally has bought back a good amount of their shares. They've nearly repurchased 20% of shares since 2017, and they're down from 455 million to about 365 million as of the end of 2021. So Ally has been repurchasing shares throughout this time period, and for existing shareholders, they've been increasing their ownership percentage in the business, which ultimately means that you're entitled to a greater percentage of Ally's future profits. So that's a great sign here. We're doing well so far. We're 5 for 5 through the first 5 pillars. Pillar number 6, we're looking for 5-year free cash flow growth. So this one's going to be our first X. They had positive free cash flow in 2017, and they had negative $1 billion of free cash flow in 2021. So this is a result of them spending more on capital expenditures for the business. So they had positive earnings. So what this means is that the business hasn't lost $1 billion. Rather, that $1 billion has been invested into the business as CapEx going forward. While having negative free cash flow for most other businesses would be a pretty bad sign, negative free cash flow is potentially a sign of a well-performing bank, meaning that they're boosting their lending. Averaged out over these 5 years, Ally consumes about $250 million of free cash flow each year. So again, pillar number 6 is our first X. For pillar number 7, we want Ally's net debt, which is their long and short-term liabilities minus their cash and short-term cash equivalents, to be below their average 5-year earnings multiplied by 5. So Ally, as of the end of last year, had about $12 billion of net debt. Multiplying their average 5-year earnings of $1.6 billion times 5 brings us to about $8 billion. So pillar number 7 is also going to be an X. Finally, the big pillar of them all, pillar number 8, we want Ally's market cap to be below their 5-year average net income multiplied by 10. So 10 is half of our usual 20 that we use for pillar number 8. However, 10 is just a starting point. It's more apt because it's in line with the averages for financial companies historically. So Ally has nearly a $14 billion market cap. Multiplying their average 5-year earnings of $1.6 billion times 10 brings us to $16 billion. So that gives us about $2 billion for margin of safety for pillar number 8. And that's going to be a check on pillar number 8. Based off of their earnings profile, it looks like Ally is slightly undervalued at this current price. This type of analysis is this doesn't necessarily mean that just because it checked the box on pillar number 8 that you want to go out and buy Ally right away. This type of analysis is just a starting point to get a holistic overview of the business based on its financials. It's not any sort of investment or financial recommendation. So before you decide one way or the other on Ally, I recommend digging into the company's filings and learning more about the business in depth. You really don't want to invest in a business unless you truly know it inside and out and can understand the essence of the business, which is just something that this type of analysis can't provide. This is just a starting point. The last thing I want to look at is Ally's dividend profile. Ally has been steadily increasing their dividends per share over the past 5 years. They've also managed to keep a relatively low payout ratio for their dividend. So based on these past years, it looks like they have a pretty healthy and secure dividend going on into the future. Whether or not these annual dividend increases are going to continue, I can't say based off of this, but it does look like their dividend profile is in good shape. So in summary, Ally checks the box on 6 out of 8 pillars. The business earns good returns on equity, it's trading for reasonable multiples, and it's experienced growth over the past 5 years. They're also buying back a good amount of shares and increasing the amount of capital that they're returning to shareholders. So again, this sort of modified analysis is not going to be perfect for financial companies. If anything stood out to you about how we can improve this type of financial analysis going forward, I would really appreciate if you left me a message in the comments. Ultimately, I want to be performing the best and most clear fundamental business analyses that I can, covering the full gambit of businesses from every industry. Any way that I can improve on that is greatly appreciated. Well, guys, that's it for today's stock analysis of Ally Financial Inc., ticker symbol Ally, ALLY. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Ally was a subscriber request, so thanks for learning about Ally with me, and have a great day.